Hey everyone, welcome back. Now in this video I want to talk about number one, how the US Federal Reserve is causing a bit of drama in the crypto and traditional markets. Number two, specific signs to look out for that might signal we're heading towards a stock market crash. I'm not being melodramatic, hear me out. And number three, how low I think Bitcoin could actually go and where we are in the bull run. Alright, smash that like and subscribe button. Make sure to turn on the notification bell to keep up to date. Without further ado, let's dive on in. Okie dokie, so less than 24 hours ago, Bitcoin commenced its next leg downwards, dropping about 7%, retesting the 42k level we first saw from that big liquidation cascade a month ago in about early December. Now look, this wasn't entirely surprising because in 2021, we had quite a few flash crashes that resulted in liquidation cascade, a lot of leveraged longs, and then a lot of leveraged shorts on the way back up, getting liquidated. And in these flash crashes, we always tended to see a retest of the bottom. So most prominent example is the May 19th crash that took out a lot of people. There was a big wipeout, which saw Bitcoin price dump down to 28k in a huge wick. And then Bitcoin ended up retesting that level around 28k a month later, and then a month later again before the leg up, the recovery. So when Bitcoin wicked down to 42k in early December, look, with the economic background remaining the same, there weren't really any telltale signs why there would be a trend reversal here. Many were expecting Bitcoin to retest 42k at some point, and a month later, here we are. Okay, so what's next? Well, technical analysis, right? TA, it's a bit of a dark art. You can kind of draw whatever line you want to string together whatever narrative that you want to string together. And look, the Bitcoin maximalists who are calling for 100 to 200k back in Q4, they kept shifting the goalposts as their models broke down, erasing old lines and levels on the charts and then drawing new ones to suit their bullish narrative. It kind of reminds me of the p-hacking issue that exists in the scientific academic world. Basically, if you slice and dice the data that you have enough, you always be able to find something statistically significant, right? A p-value less than 0.05, even if it doesn't really mean anything, right? So this is why I like to combine TA with fundamentals on this channel. Like, if anything, I'm probably more of a fundamentals guy than a TA guy. You see, the macroeconomic picture has changed significantly since the previous Bitcoin bull runs, right, in 2013 and then in 2017, right? So we just had a 2021 driven by ultra loose monetary policy, endless money printing, and also distorted price action, right? Huge liquidation cascades caused by an excess of leverage in the markets by inexperienced retail traders. I've talked about this many times on the channel, and maybe I'll link some videos above and below. Now, these TA experts on Twitter, on YouTube, who are kind of, no offense, drunk on too much hopium, and during every dump, they're going to say, we've hit the bottom, now it's going to be time for recovery. They really need to be putting our relatively small $2 trillion market in the context of a much larger economic framework, right? That includes what's happening in the $150 trillion equities market, right? Basically the stock market. And of course, that includes government and central bank policies as well. All of these things have to be considered. Now, this latest drop for Bitcoin on this downward trend, right, that was due to the US Federal Reserve announcing its intention to start raising interest rates pretty soon, probably in March. Now, this is not really new news. Jerome Powell had been dropping breadcrumbs on this for a while, hinting, but every time we hear about it, the markets do get jittery. And look, we've had super easy monetary policy since the coronavirus started. Endless money printing, right? That's been inflating the prices of assets, right? That includes stocks, properties, crypto. Up to 80% of US dollars in circulation was printed in the last 2 years, right? $16 trillion on top of the $4 trillion that was there 2 years ago, right? Here's the plot for the M1 money supply. But look, the music has to stop at some point, right? It's got to stop, right? And when the US Fed starts tapering, when interest rates start going up, it's not going to be good news for the stock market. That's traditionally been positively correlated with the crypto market, right? If the stock market tanks, well, the crypto market's probably going to be in big trouble. So how low can things go, right? And we'll start with crypto. In particular, we'll start with Bitcoin because the rest of the market still pretty much is tethered to Bitcoin's fortunes. Although it's got to be said that the alts are holding up particularly well, which is why I don't think we're in a crypto bear market. Okay, so looking at the Bitcoin charts, a lot of TA gurus are keeping their eyes on this big trend line here to see whether it can hold as support right now. So from the all-time high of 65K all the way back in May last year, this trend line was acting as resistance for Bitcoin's price for about 6 months. We saw a failed test, right? We saw a failed test in around September, coinciding with the buy the rumor sell the news launch for El Salvador accepting Bitcoin as legal tender. And then in October, we finally saw Bitcoin smash above this trend line thanks to the Bitcoin futures ETF euphoria. And then we got our 69K all-time high. And now in early 2022, we're seeing that we're seeing another retest to see if we can flip this trend line into support and bounce off, right? You can see something like this. That's one of the TA narratives that's going on at the moment. Another narrative at the moment is that we are in the 40 to 42K range, which traditionally has been strong support in 2021, and many are hoping that BTC can simply bounce off, right? Or perhaps after some sideways trading, bounce off. Now personally, and I mentioned this over a month ago, it's not a particularly popular opinion, is that look, I think there's a chance we're gonna go even lower and end up with a double bottom, right? 1, 2, double bottom. It's not something we've seen before during a crypto market cycle bull run, right? Not in 2013, not in 2017, but I keep arguing that every cycle is a bit different. And look, I just don't agree with a lot of the people on Twitter and YouTube who continue to try and fit this cycle in the mold of the previous cycles. It just doesn't make sense to me, right? The crypto markets have changed quite a lot and the economic conditions are different. So anyway, this double bottom hypothesis is not without precedents. If we look at the stock market, and I'm talking about zoomed out over a much longer period of time, over 2 decades essentially, double bottom, right? Actually double top and double bottom, right? Followed by a massive blast off that's yet to see a real correction, right? I'm not going to count the March 2020 coronavirus dump as a bear market. It really is more of an anomaly. We bounced back very quickly thanks to an avalanche of stimulus, right? Uber easy monetary policy. So back to Bitcoin's price. Look, not financial advice, but I'm kind of cautious at the moment. I am buying the dips on the way down, but I'm also keeping some money on the side just in case we do go down all the way to this double bottom target around 30K again, right? We revisit that area to reestablish it as support. Now, overall, a lot of what's going to be happening is going to be influenced by factors external to the crypto space, right? So for instance, if Omicron gets really bad and the central banks indeed push forward with their tapering, we could finally see that real bear market, right, in the traditional markets. And by that, I mean like a 20% correction, right? Maybe down to here. And that would be massive. You got to remember the traditional markets, right? They move slower than crypto, right? The New York Stock Exchange, the NASDAQ, London, Hong Kong, Shanghai, they're open for 6 to 8 hours during work days, right? Not including the pre and post market hours. While crypto's alive and kicking 24/7, right? And don't forget the stock market is way, way bigger than crypto. We're looking at a global $150 trillion equities market, right? Compared to our tiny and mighty $2 trillion crypto space, right? Something I do talk about in a bit more detail in the 2022 crypto predictions video, which I will link above. So a 20% correction on the S&P 500, that would be massive, right? We're looking at a real bear market here, something that is akin to the 85% corrections that we traditionally see in Bitcoin, right? That signals that we're in the 2 to 3 year bear market that's punctured by the Bitcoin halving events every 4 years. Okay, so what are some telltale signs that a stock market crash might be coming, a real bear market? Well, here's a big one. We're on track to flatten and invert what's called the bond yield curve, right? If you plot the bond yield, bond returns versus the term to maturity, right? The length of time of your bond. Basically going from where we are now, which is a curve that's concave up, we're going from this kind of situation towards a inverted curve where the curve is concave down. Now, the bond yield curve inversion is one of these signals that economists and policymakers do keep a close eye on. When this inversion threshold happens, it's historically pretty much always meant that we're going to get a recession within the next 18 months. Now, in case you're a bit confused about this bond yield curve, so the short story is this. You've got different types of assets, right? Crypto, stocks, bonds, commodities like gold and so forth. And bonds are supposed to be the super safe, or what do we call risk off assets that you escape to during the bad times, right? So during the good times, when the economy is running well, investors take more risk by jumping into risk on assets, and that's usually stocks and increasingly crypto as well, that give better returns than bonds. And during the tough times, investors escape to bonds that'll guarantee a yield, right? Basically guarantee a return, albeit a very low return, right? Remember, in investing, lower risk statistically means with lower returns. If we check out the returns or yields paid by US Treasury bonds, right, which are considered so safe that it's called risk-free, we can see the returns down here, right? And the key thing I want to draw your attention to is notice how the bond returns, they depend on the term of maturity that you've selected on your bond, right? So the longer bond terms, they're going to return a higher yield, which is why our current yield curve looks like this, right? A concave up curve, meaning that a longer term bond, right, say 30 years, that's going to give you a better yield, right, a better return than a shorter bond term. But to keep a long story short, the trajectory the US Fed is taking us on right now is flattening the yield curve, and once it inverts, which some economists predict is going to be not too far away, as early as March, then we're going to be in a bit of trouble, right? Historically, a yield curve inversion has meant a recession with almost certainty after a certain amount of time, within 18 months. And investors are going to hedge against the bear market by moving onto risk-off safe haven assets, right? Investors are going to want to play it safe with their capital, which is probably going to play havoc with any crypto bull market. The bottom line is this, not financial advice, but I'd suggest to be a little bit cautious. No one has a crystal ball, and at the moment, the wider economic conditions, they don't look too great. Now back to Bitcoin, look, we could bounce off 42K and begin recovery. Maybe, maybe not. For sure, I think we can go lower and maybe end up with this double bottom before the real recovery. In either case, look, I don't believe the market cycle bull run is over. If that were the case, the altcoin dominance wouldn't look this strong. But I do believe that this time the cycle is going to be lengthening. It might take us up to another year, in my opinion, to get that final blow off top that everyone's waiting for, that euphoric parabolic move that sees Bitcoin go to something like 200K, you know, what we're all waiting for. And don't be surprised to see more flash crashes along the way, because derivatives trading platforms, it's become the norm in crypto, right? And that means semi-regular leverage flush outs like here and here, it's going to become more commonplace, right? The more prices go up, the more money naive traders are going to be borrowing against their crypto collateral to buy even more crypto. We know statistically how that ends up for most traders. All right, let me know what you think down in the comments below. Make sure to drop a like and a subscribe if you found this interesting to help me grow the channel. Have a great day or evening wherever you are, and I'm looking forward to seeing you in the next one.